friends. Today I have two stock updates with regards to one which is NCC. There's a recommendation by one of the uh, websites regarding two stocks. This is a website normally recommends some trades and shares information on the Indian stock market. So they've suggested a couple of stocks. One is NCC. It has an upside potential as per the analyst of 40%. We'll quickly go through some information on the company. We'll see uh, what the company financials look like currently. Okay, this is the current. You can see the logo of the company. Uh, this is the current price. You see, last 5 days almost 1% down. Last 1 month almost 4.5% down. 25% negative return in the last 6 months, and 28.5% the company is lost in value over the last 1 year. So we'll quickly go through and see what the company does. So NCC Limited undertakes trunky EPC contracts and BOT projects on public partnership basis. Uh, so company's construction activities encompass buildings, transportation, water and environment, electrical transmission and distribution, irrigation, mining and railway projects. It has also entered the smart meter segment. It has completed 500 plus building projects, 20,000 plus kilometers water pipelines, and 350,000 acres of land. 350,000 acres of land, building, transportation, water and environment, electrical transmission and distribution, irrigation, mining, railways, real estate. So the company, through its subsidiary NCC Urban Infrastructure, engaged in real estate activities operating in Bengaluru, Hyderabad, Chennai, Ranchi, Mumbai. Completed about 11.7 million square feet. Clients: Airport Authority of India, Adani, IOL, NBCC Power Grid, then Bangalore Metro Rail Corporation, Reserve Bank of India, Nagpur Metro Rail, Pune Metro, and others. Company has an order book of 55,000 crores as of 9 months, that is until December 2024, which is FY 25, split across building, transportation, electricity, irrigation, and mining. So, major part is transportation and building and electricity transmission and distribution. So orders worth 6,400 crores received recently, price of 224, market cap of 14,000 crores, high of 364, book value 117. So the company is nearly two times trading at its book value. Dividend is 0.98%. Return on equity is 11%. Return on capital employed is 22%, which seems to be good enough. And companies delivered 19% CAGR profit growth over the last 5 years. Healthy dividend payout of 19.6%. Company has low return on equity of 11% in the last 3 years. Cost of borrowing is high. These are some comparison of peers. You can see 32, 64, 52, 30, 41, 36, 25, 17. Those are the price to earnings ratio. NCC fares the lowest amongst its peers. Then you can see between the last 2, 3 quarters, sales revenue has been growing first by 150 crores, then by about 800 crores, which is a very good positive sign. You can see overall uh, the last 1 year there was a drop in net profit between the first 2 quarters. Then you can see the last quarter, March 2025, has been the best quarter in terms of net profit. Then you can see year on year in the last 2 years, companies added about uh, 35% revenue growth, which is about 17-18% CAGR on a yearly basis. Even the net profit uh, has been growing at about 15 odd percent per year CAGR the last 2 years, which is a good sign. Here it is showing 12, but if you calculate, it's about 13 odd percent in the last 1 year. Average is about 15%. Here it is showing 35% in the last 3 years, which means that 2022 2023 must be the good profit generating years for the company. Then sales growth of 7% in the last 1 year. Stock price is a minus 30%. So basically the correction in the stock market that we had in October November last year 2024 may be the resultant in which the stock price has decreased or company has lost value. Return on equity is about 12% in the last 1 year. Then you can see reserves have grown by about 650 crores, almost 700 crores. Borrowings have increased drastically. Higher borrowings would lead to higher interest costs. So something that the company would need to keep a balance and keep a trade-off. If the company is not able to generate enough additional revenue to cover these costs, then it will impact the overall bottom line and the financial ratio of the company. So something that is not very ideal for the company. Look at the overall other liabilities have also increased by about 1,500 crores. Then debtor days are the same, inventory days have reduced, days payable have also reduced. So overall, better comparison, improvement in the managing the financials. Return on capital employed has increased from 19 to 22% in the last 2 years, which is a good sign. Yeah, promoter holding of 22% is pretty low. FIIs have also reduced their stake by 5% in the last quarter. Overall, 7% in the last 6 months. DIIs have increased their stake by 3% in the last 6 months. Public holding has increased about 4% in the last 6 months. So this clearly means that the company can be highly volatile in terms of price and in terms of volume due to the high public shareholding here. So we'll look at some information as the suggestion by the Trade Brains website. So we've gone through most of the work that the company does. We've gone through revenue, we've gone through the financials, so we won't really go through this. There is some issue that is there in the court. The company has obtained orders from Andhra Pradesh state for the construction of residential and development blocks. The High Court's totaling 9 to 9,500 crores. Uh, the other part is risk factor, working on capital management risk because of the length of the company's working capital cycle. Since the organization depends on the recovery of debtors, including unbilled revenue, it bears counterparty risk. Long-term initiatives also make it susceptible to implementation problems. The second company in question here is Vedant Fashions Limited. Current price of 783, target price of 1110. Established in 2002, leading market for Indian wedding and celebration wear. Based on sales and profits, the company operated 662 exclusive brand outlets. So this is it's known for well famous brands Manyavar, Tamim Rivas, Mebaz. Additionally, the company is expanding its presence in the women's Indian women and celebration attire. So, this company over a period of 2 years seems to have an upside of about 41% as per the suggestion here. So, we won't really go into the financials. What you can possibly do is, if you all have any interest in this exclusive wedding showroom brand in terms of Manyavar. The name of the company is Vedanta Fashions, so something that you can look into if you wish to explore and analyze the stock. So something for you all to pick up on. So friends, thank you for watching the video. I hope you can share valuable comments and insights into how to make the presentation of the video better, and also suggest of any other stock details or analysis you wish to get an update or insights into. So thanks for watching once again. We'll connect with another video very soon.